This is the Scrap Metal Commodities Recycling Report by BENLEE and Raleigh Goldsboro Recycling, December 12, 2016. Due to weather problems in the Midwest, we could not get to the studio to shoot this morning, so this is a special remote report. Last week, most commodity prices rose while Wall Street hit new record highs for yet another week. U.S. steel production rose the most in any one month in about 6 months and is at a 3-month high as we continue to hear mill order books continue to increase. Oil prices rose 5% in recent days to about $54 a barrel, the highest level in about 18 months, as OPEC and non-OPEC countries such as Russia and even Mexico have agreed to cut production to get prices up. This will clearly help U.S. oil drilling related jobs, but of course will raise fuel and oil related prices. Very importantly, while economic conditions are good, these higher oil prices are based on production cutbacks, not increased demand. The oil rig count rose yet again last week. The increases are helping jobs and are supporting higher steel prices. Steel used in these rigs is increasing, but the oil rig count remains down about 70% from 2 years ago. Iron ore ended up at about $80 a metric ton, more than double the price of a year ago, which is the reason why we are seeing higher scrap prices. Scrap ferrous prices rose between $40 and $50 a gross ton last week, depending upon the region and the deal cut with the mills. It is one of the largest one-month increases in over a year. Incoming scrap flows to scrap yards are up a bit, but not a lot. So if exports remain good and domestic demand continues to increase, prices could rise again in January. Hot dip galvanized steel remains about $850 a ton, up over $150 a metric ton from just a few months ago. An incredible move in such a short period. Stainless 304 scrap held steady at about 33 cents. We are hearing of more increases this week on slightly higher demand. Copper rose 2 cents to $2.63 a pound, meaning copper is staying near their multi-month highs. Higher prices could bring some inflation, which has some positives and negatives for the economy. Related copper inventories continue their fall, which helps support the higher prices. Aluminum rose to 79 cents, up about 18% for the year on increases in volume, production constraints, and production cost increases. Aluminum inventories are staying near 9-year lows, which should mean prices will remain somewhat stable for months to come. Chinese exports rose to almost $200 billion last month, the first increase in 8 months. China consumes about 50% of the world's copper and manufactures about 60% of the world's steel, so this increase will help support higher commodity prices. Wall Street's Dow index rose 3.1% last week to fresh all-time highs. People feel wealthier when stocks are higher, which can help support spending, which will support stable to higher commodity prices. ISM's non-manufacturing index, which measures mostly U.S. services, rose to 57.2 in November, the highest level in over a year. Increased business activity and employment were the drivers, which is bringing the higher commodity prices. Initial jobless claims fell to 258,000 after being up a bit last week. Under 300,000 a week is a very positive measure, and we have now been below the 300,000 for an incredible 92 weeks in a row, which is the longest streak since 1970, 46 years ago. A great economic performance. The U.S. Consumer Sentiment Index hit 98 in December, the highest in almost 2 years. This is a great sign that will bring great holiday spending and will support higher to stable commodity prices in the months to come.
With that, we hope all have a safe and profitable week.